All right, let's get right into it. Finding stocks with a really solid, high dividend yield can be tough. So today, we're going to cut through all that noise and put the spotlight on three elite companies that the experts think could be amazing additions to your income portfolio for the next few years. Let's do this.
So, we're focusing only on the dividend aristocrats. And you might be asking, why? Well, think about it. A company just can't raise its dividend for over a quarter of a century without having an incredibly strong business. This elite status is like a built-in filter for quality, leaving us with some of the most dependable, shareholder-friendly companies out there.
So the game plan for this explainer is really simple. I'm going to give you three specific, actionable ideas that are backed by expert analysis. These are the kinds of companies that could really become the foundation of a great income portfolio as we look ahead.
Okay, first up, we have a company that might just be flying under your radar, Amcor. And you know what? The fact that it's not some big, flashy household name is exactly what makes it so darn interesting. And that quote right there from portfolio manager Ginny Harrington, it just nails it. That's the whole idea. This isn't just a solid company. It's one that the market seems to be sleeping on. And that, my friends, can create a huge opportunity for investors like us. So what exactly does Amcor do? Well, they're the ones who design and make the packaging for pretty much everything, from food to medical supplies. But the real story, the big news, is their massive recent merger. This is a huge catalyst, and it's expected to fuel about 13% earnings growth next year. And things are already taking off. Recent sales were up a whopping 68%, which tells you this new powerhouse is just getting warmed up.
And here it is, the payoff for investors, a 6.2% dividend yield. I mean, to get that kind of income from a dividend aristocrat that also has such a clear path for growth, that is a really, really compelling combo.
Hey, by the way, if you're finding this useful, do me a quick favor and hit that like button and subscribe. It seriously helps us make more deep dives just like this one. Thanks. All right, on to pick number 2.
Our second high-yield aristocrat is Enbridge, an absolute giant in the energy infrastructure world. But here's how to think about it. Don't think of them as an energy producer. Think of them as the essential plumbing for the entire North American economy.
This quote perfectly explains why this is such a smart play. Investing in Enbridge isn't some risky bet on the wild swings of oil and gas prices. Nope. It's a bet that energy is going to keep moving from point A to point B. Enbridge is just a toll collector on that super important energy highway.
And believe me, it is a massive highway. We're talking about 40,000 miles of pipelines. And as our world gets more and more digital, just think about the insane energy demand from things like data centers. It's exploding. Enbridge is sitting in the perfect spot to capitalize on this, offering a steady, income-producing way to play the energy sector.
And the income it kicks off is pretty great too. We're looking at a dividend yield right around 6%. So that makes Enbridge another really powerful income generator for the portfolio.
All right, for our third and final pick, we're kind of heading to Las Vegas. Let me introduce you to Vissi Properties, a really unique real estate company that proves that old saying, in a gold rush, it's good to be the one selling the shovels. Or, in this case, it's good to be the landlord.
Okay, listen to this because it's pretty wild. During the pandemic, when the whole world basically shut down and almost every other real estate company was panicking, Vissi collected 100% of its rent. 100%. That's just an unbelievable testament to how rock-solid their business model is. See, VCI owns the actual physical buildings of these iconic casinos that are run by giants like MGM and Caesars. Their tenants are on these super long-term triple-net leases. All that means is that the casino operators, the tenants, pay for pretty much all the expenses. This creates an incredibly predictable stream of cash for VCI. And right now, the stock is trading a bit off its highs, which could be an interesting entry point.
And here's the jackpot, a 6.4% dividend yield. That's the highest of our three picks, and it's your reward for owning some of the most durable real estate you can find.
Now, take a look at this chart because it tells the whole story. See all those red bars? That's how much of a discount most real estate sectors are trading at. We're talking office, hotels, you name it. Now, look all the way to the top. That green bar for casinos, it's one of the only ones trading near its actual asset value. That just shows you the unique strength and confidence the market has in this particular niche. So we have three really different high-yield ideas. But let's zoom out for a second and tackle a bigger question that I know is on every income investor's mind right now. And it's a totally fair question. I mean, with government bonds paying decent yields, why would you take on the extra risk of owning stocks to get your income? Well, the answer really boils down to one critical word: growth. See, a bond pays you a fixed income. That payment is never, ever going to go up. But a great dividend stock, especially a dividend aristocrat, aims to grow its dividend year after year. That growing income, plus the potential for the stock's price to go up, is your number one weapon against inflation.
And this isn't just a theory, right? We've got the numbers to prove it. As Jenny Harrington points out, dividend income has historically grown at about 5.5% a year. That growth is exactly how your income keeps up with and hopefully beats the rising cost of everything over the long haul.
Okay, let's bring it all home and wrap this up into a final playbook for you to think about.
So to recap, we've got 3 very different opportunities here. First, Amcor, the under-the-radar packaging leader that's set for some serious post-merger growth. Then you've got Enbridge, the steady energy toll collector that benefits from our increasing need for power. And finally, Vici, the casino's landlord with that ridiculously resilient business model. And the best part? All of them are dividend aristocrats, and all of them are yielding around 6% or even higher.
And that is our deep dive on 3 high-yield dividends to keep an eye on. But now, I really want to hear from you. What high-yield stocks are on your watch list for 2026? Drop your best ideas down in the comments section below. If you got some value from this breakdown, it would be awesome if you hit that like button and subscribe for more insights. Thanks so much for watching, and let's get this conversation started.